All right, folks. So we are live. So just wanted to let you guys know. I think it's gonna be a very serious stream, right? It's gonna be a serious. I feel that at this point of time, I just have to address this and be as honest as possible, especially with folks who are new, who are existing clients, or who are like literally just observing this space at the moment and what has been happening and why exchanges have been failing consistently over and over and over again. Okay, guys, so this is from a very personal experience, right? Having invested in exchanges either via the tokens or through equity. What is the main issue? And I think right now I got to help you all understand how are exchanges just running at this point of time, right? So we start from that and then we move along to what problems they are facing, how are they operated, okay? At least once you start understanding this as a consumer, and even if you are an accredited investor, you also probably want to know how exchanges, especially in the crypto space, are running. Okay, so I'm going to exclude folks who are in the private banking sector who are having a derivative product. The fact that you are handling or buying into a derivative product via an existing licensed financial institution, you are kind of safe in a way. I am talking to people who are actually wanting to buy the cryptocurrencies, right? And wanting to own the cryptocurrencies. So at this point of time, if let's say you are someone who is planning to buy Bitcoin, you're planning to buy Ethereum, there are only that many exchanges or means that you can do so. One, the most straightforward way is to Google where do I buy crypto, and then from then you will have the ads pop up on either crypto.com. If you are able to use Binance, you can use Binance. You are able to use Gemini, Coinbase, the usual, right? And then of course at one point of time it was FTX, but now you're having the situation where you're having exchanges collapsing left, right, and center. Now, you need to know how they operate. Firstly, it's always based on the fact that what kind of user base do I have? What kind of presence do I have? International or local, right? If they have a very small local presence, it depends on that country's receptiveness to even cryptocurrencies. At this point, crypto is very niche still. It is really very niche. It is definitely more prominent versus 5 to 10 years ago, okay? Right now, you have the news like Bloomberg, CNBC, Forbes, all covering cryptocurrency movements and developments. Also, when you kind of go to conferences, you're a little bit more aware of what kind of companies are building blockchain solutions, whether is it DeFi, is it in gaming, is it a payment gateway. It's pretty standard at this point of time. Everybody's trying to come up with a solution. And to be frank, depending on what kind of solution is available, there are just too many out there in the market. So same thing, right? Exchanges are also vying and fighting for your attention, okay? Meaning that you are only going to probably put in a very small amount of your liquid funds or even your net worth into crypto at this point of time, especially with what's been going on. You are going to have very little confidence in the market. So exchanges know this, right? So they will have multiple kinds of incentives, either marketing campaigns with high yield, right? That will attract you to put or convert your fiat into a token, okay? And that token can come in the form of another token, or it could come in the form of a exchange token, which is, for example, BNB, FTT, Huobi token, whatever token that you can. An exchange, right, literally has to create some incentive if they launch their own token. Now, I do not want to cover whether it's a security or not at this point in time. I just want to explain to you how they function and why they fail. Okay, so the next thing, right, after vying and fighting for your attention, and this is due to the fact that, okay, you have every individual who understands investing will want to try to fight and build their net worth, grow their net worth, or even just fight inflation, right? So you know for a fact that everything is getting more and more expensive. If you do nothing, right, with the salary that you get every month, you're just gonna spend on your liabilities. There's no way that you can grow your net worth because whatever you earn, right, you're going to spend on liabilities, monthly liabilities, so on and so forth. Whatever liquidity that you have left, either you keep it in the bank account or you think of an investment. Hence, we have this cycle. Right now, you found crypto, you feel that, oh, there are staking rewards, that there are tokens that pay you a good staking reward, and or there's a capital appreciation. That's why you kind of stepped into crypto in the first place. You're not using crypto solely as a payment gateway. I do not believe that people buy cryptocurrency so that they can actually spend it. They are actually wanting to speculate on it, or at least think that at least there are certain tokens that are going to yield me or return on investment, or give me a return on investment going forward. Okay, this is why people are in crypto. There's really no other there's no other real reason why would I even buy a cryptocurrency if I don't feel that it's going to yield me a return in any given time frame. I don't want to talk about short to whether is it short or long term. I don't care. I just want to let you know that people buy because they want to speculate. They want to see some capital appreciation, or they're trying to beat inflation. Okay, so that being said, exchanges want to provide a yield, right? So let's say right now they got your attention. They have a good user base. They are now buying into all the cryptocurrencies, right? You bought into the cryptocurrencies. Also, you are the one that is providing them that liquidity, okay? So you bought into a certain token. This exchange, right? Exchanges provide and do one thing very well. They connect you, right, to your fiat account, right? Usually, most exchanges, the reason why I would use a centralized exchange is because I have the ability to buy and sell quickly, and then I can move it out into my bank account when I want to take profit or I want to cut loss. At least I can go back to my bank account. This is the sole reason why centralized exchanges are usually that valuable, right? Because I want to be able to come back to fiat. A DeFi doesn't allow you to do that. A DeFi exchange or a DEX only allows you to speculate from tokens to tokens or provide liquidity. If you are a liquidity provider, you are providing liquidity for anyone who wants to speculate or trade tokens. That's really the sole purpose. So now, as a centralized exchange, you have that ability to at least get back to fiat after you have done your speculation, or after you have made a nice profit, a capital appreciation profit, and go back to fiat. Okay, so now that has been settled, the functionalities have been settled. You want to understand how do they start? How do they start shoring up capital? Right? They shore up capital, of course, in only a few ways. One is through backers, right? Or they actually shore up liquidity and share liquidity with the bigger boys. For example, I could, if I was an exchange and I built some kind of relationship with, for example, either Gemini, with Binance. Okay, I want to share that liquidity because right now I have a small pool of players or anyone who are using my platform, right? And I'm able to function in this jurisdiction, for example. Binance, you're not able to function in this jurisdiction, but let's still make money. What I do is I approach Binance for the liquidity so that there's enough market making, there's enough liquidity so that my pool of clients within this jurisdiction will still buy and sell, and it gives me a very nice spread for these folks, right? So unfortunately, I cannot tap into that much liquidity because end of the day, it's all about the commissions, right? Because if I'm a small player, Binance can only allocate so much liquidity to me as a small player. Let's just say Ryan Exchange, for example, okay? And although I have the license within my country to function, right, it doesn't mean that I'm going to have a lot of clients to begin with, right? It all depends on the marketing, same thing, the campaign, so on and so forth. So now I'm having this pool of funds that I'm holding, okay, and I potentially should be making more money with these tokens, right? So this is the part where it gets a little bit sketchy. So since I'm licensed, I should be very transparent and audited consistently on the types of dealings that I use the funds for, correct? So since I need to be very transparent, everything needs to be documented from who I lend it out to. Like say, for example, all these client funds, I need to do something with it in order for me to generate a yield for you, to make it attractive for you to use me. Because you are definitely, as a consumer, fighting and finding out which other exchanges are going to give you the best bang for your buck. For me as an exchange, I need to be able to provide that. I need to balance out the types of services and also ultimately give you the best user experience. Okay, so this is kind of what's happening, right? So now that you understand that, I will obviously try to find ways or liquidity partners, whether they are in some kind of a bigger market, and I will say, okay, I managed to raise maybe $50 million in my latest Series A or Series B. Okay, and why was I able to raise that amount of money? I was able to raise that amount of money because, right, I have a license. Right? And that's really just it. I have a license. It doesn't mean that I have a lot of users. No matter what, most exchanges don't have a larger user base than Binance. They don't even have a larger user base than even Gemini or Coinbase. I'll be very frank. Even though those are like prominent and listed companies, they do not provide the best or full user experiences versus Binance or FTX at the point of time. Right? Now, when you have this, now that you're defining this, right, you're also noticing that, okay, what if I wanted to have leverage trading, for example? Coinbase can't do that. Coinbase doesn't provide leverage trading, right? What if I wanted to buy the latest DeFi listing? Sometimes that's not even available on Gemini. Right? Or Gemini will be very careful on listing their tokens, which is good. It's also good when an exchange has a stance where we're not going to list every single new token out there. But also, that kind of defeats the purpose of crypto, right? Because crypto is about speed. It's about the efficiency of being able to see the latest projects and have access to it. But the DeFi platforms have that advantage. DeFi platforms will have those listings available, but sometimes the liquidity is a question, right? Whether there's enough liquidity, whether there's enough tokens, and most new projects will always list on DeFi because there are literally low to no barriers of entry. Whereas if a new token wanted to list their tokens on an existing centralized exchange, there's definitely a lot of layers before they can get listed, and of course a very high listing fee. So all these things, right, coupled together, it's gonna be quite a bit of a mess if you think about it. So here you are wondering whether there's firstly a credible project, right, versus you listing so that you can make a commission. So centralized exchanges have to quickly do a balancing act, whether I can make money and whether you are popular enough for me to make money. So exchange fees are also very important, right? Making fees, commissions from your user base is one way that you can generate revenue. But not every exchange has that ability to do so, because sometimes the exchange, for example, Ryan Exchange, is literally having a very low user base that is knowledgeable about the crypto space versus Binance that has been around longer. The users are definitely more mature. They are more speculative. They know exactly what kind of new tokens are available. Binance can confidently list new tokens versus Ryan Exchange, because Ryan Exchange maybe just caters to people who just wants to buy and sell Bitcoin and Ethereum. So the main bulk of my users only know about Bitcoin and Ethereum, and that's something that I can see within my analytics. I don't need to go and list the latest tokens because the latest tokens will probably have zero traction, right? So even if I list them, it's not going to generate any kind of yield, or neither yield for me as an exchange, and neither is it going to benefit the project that has listed on me, right? So this is what's been happening, okay? Now, if I want to generate yield as an exchange, obviously there is no way that I can do it on my own, okay? If I have a small user base, I need to still take it to the big boys. And when I take it to the big boys, even though I can only do so much due diligence on them, there are times when most other big boys who seemingly have a good valuation on paper, they are actually not very honest with the way they manage their funds. And like I said, big boys doesn't mean within the same country, you know. I have to look at Hong Kong. I need to go and look at countries in the US or in Dubai or offshore, wherever they are. And, you know, you meet all these people who are in the industry, whether they have good intentions or not, it only will be revealed later. So let's say, for example, I have 50 million of US dollars, right, that is doing nothing at the moment, because I'm not big enough to buy up anybody. Neither am I, you know, in the right position to do anything with my funds to generate a yield. I would actually start lending it out. Now, it doesn't matter how much I lend out, whether is it a small portion of that 50 million or it's like through multiple transactions, it doesn't matter. Moral of the story is why everyone started to collapse, because ultimately most of them, to try to generate the high yield internally, they would actually result in proprietary trading. So proprietary trading means that it's an in-house trading team trying to fight against the market. Now let me ask you a question. If we know for a fact as a retail investor that most cryptocurrencies are so volatile, and we know for a fact that we are now in a bear market, right? And there are occasional pumps that happen, right? These investors who are trying their best to create some kind of trading strategy, at the end of the day, at some point, someone gets liquidated. As you can see, if Three Arrows Capital, right, can go down, what more the smaller proprietary trading houses? They are not going to be spared. There is only going to be so many people who are sharp enough to pick these kind of market fluctuations. And even so, you have to have a very conservative trading strategy, like literally a very boring dollar cost averaging trading strategy that actually you and I could probably adopt. It's not going to be like so complex that, wow, only this dude is only going to be able to figure it out. Like at this point of time, right, a dollar cost averaging strategy is more than enough. But sometimes people get lazy. So proprietary trading teams at the end of the day are going to be only benefit from commissions, right? So you think about it this way. How long has the crypto industry been around? Let's say for the last maybe 12 years, right? So the traders are not very mature themselves. They are going to be very young. So when young, you're ambitious, you're like, oh, okay, anyway, this is not my money. It's like, my boss gave it to me, right? I'm in charge of trading. I'm going to try to make a profit from it. Definitely, how many times or how many platforms at this point of time can offer you that kind of leverage, right? So you start leveraging on Bybit or whatever. Bro, to be frank, right, most of the traders are pretty degenerate themselves. Okay, I'd be very frank, most traders are pretty degenerate themselves. And these are people who are on the other side of the screen, right? So eventually, when you're large enough, you're actually going to be more conservative. When you are younger and a newer exchange, you're going to be very aggressive because you're trying to make a name for yourself. You're trying to keep up with marketing. You need to generate marketing dollars. There's a lot of stress behind the scenes, I can guarantee it. Because for the fact for them to have a job, right? They are obviously wanting to perform, right? And it's very normal. You are going to want to perform in your job so that you can get that pay increment, that next promotion, so that you can have a better lifestyle. It's very understandable, and that's what's been happening, right? So the moment that starts to happen, you're going to start having yourself or your positions or your strategy start being skewed to too much of a risk versus what you can deliver. Okay, and all it takes is a few rounds of liquidations within what has been lent to you, and that's when, okay, you can't pay back what you borrowed. Okay, you can't pay back what you borrowed, and that exchange, poor little Ryan exchange, is gonna go down because I suddenly need to, do liquidations. I need to do withdrawals, but now the 50 million that I lent you is no longer available to me. So it wasn't exactly, not always entirely my fault. I could have asked you, how are you using these funds to generate a yield? And if you told me that you're doing very basic lending, right, I could still make a spread from that. Because you are telling me that you're not doing any leverage trading, but behind the scenes, actually you are. So there's no governing oversight. What I'm trying to say is there's no governing oversight that keeps all the various exchanges in check. Firstly, it's very difficult, okay? I'm not, this video is not to blame the government or whatever it is. We are all in it with eyes wide open. But if you are someone who is very new and you're not even sure, this video actually educates you on what has been happening, okay? And that's the truth. The truth is a lot of exchanges internally are trying to generate a yield, but you're having this market that is like, for example, it's a very low volume market at this point in time. Okay, it's low volume. It's not like the stock market as liquid and everything. It isn't. And also coupled for the fact that we do not know how stable are stable coins, right? So a large part of all this coupled together with the fact that you do not know whether the stable coins that are entering the market are they, are you saying that every single stable coin is backed one for one? No, it isn't. There's a lot of inflated value in crypto. Just like there's a lot of inflated value in the stock market. It's the same. It's just that, the market cap is very different. The stock market versus the bond market versus the crypto market. It's all inflated, guys. And it's also heavily manipulated. Okay? So when you step into crypto, just bear in mind that it is a very young market. Okay, it is still very young. I have no other ways to say it. It's still a very young market. Also, at the same time, it is still a market that is very selfish. It's under-regulated. In fact, they probably going to be very low to no regulation. And at the same time, even if there was, authorities cannot do much. There's no real insurance. The insurance is usually done by internally, like you have a shore of funds, and then you're trying to make sure that, okay, in the event there's going to be any exchange run, or they call it, it's not a bank, right? You cannot say that you are a crypto bank when you have just such poor liquidity all the time. Or whenever there's a withdrawal that's supposed to be done, you can't even do a withdrawal. It's all very bad. And like I said, at this point of time, I would strongly recommend, right, now that you know how exchanges are trying to generate yield, be a little bit smarter when choosing exchanges, how much tokens to have, and always make sure you have your tokens on a cold wallet. Yes, and to be frank, you don't have to. The market is not that speculative at this point in time. Like no point you make maybe 10-15% only to lose your whole holdings, right? It doesn't make any sense. Like why bother for 5 to 10% or even 15% on occasions only to lose your whole holdings, right? I'd rather you kind of come in with eyes wide open. You're having a certain risk appetite that you can accept. You can accept the volatility in crypto, buy gradually, and then put them in a cold wallet. Like if you cannot even store the cryptocurrency, don't bother. Okay, just don't bother touching it. Just don't bother speculating on it. Also, at the same time, if you wanted to buy a project, right, that is still figuring out its security, right? Like bridges get hacked all the time, right? And DEXs are no better. DEXs are not always secure. Okay, and it's very hard to determine the code because most of us are not coders. We only can allow time, right? Until and also by the way, hackers also take their time to attack something because they know for a fact that if there's not much money in there, it's not worth their time. So things can and could happen only when, for example, a platform is large enough, it's valuable enough. But then, of course, naturally, they need to think on how they need to liquidate. Anyway, that's a whole story for another time. I don't want to drag this video anymore. This is the second video for the day. But I just want to let folks know that, be very watchful. Crypto is a very, very high risk space. It's super high risk to the point that, I think that a lot of people who step in are like, oh my God, this is just, it's all over the place. Like I said, it's all over the place at this point of time. And with the continued defaults and buyouts of whatever you thought was too big to fail, has failed, right? There's no such thing as too big to fail in the whole world. I just want to let you know that even banks, when they default, it's questionable whether their government is going to come and bail them out, okay? If the governments don't step in, obviously they're just going to go down. And it all boils down to how much assets are there and who I would say that whether that bank is valuable enough for the government to kind of bail out. But right now in crypto, right, there's no such thing. In crypto, there's no such thing. I can tell you for a fact there's no such thing. The only reason is firstly demographic. The next is the user base. Whether you and to be frank, crypto user base, right, is one of the worst, right? Because everyone comes in with the nature of speculating. No one comes into crypto and says that, wow, we're going to be banking our pension funds here. We're going to be putting a huge chunk of our family wealth and our family office money inside here. Family office money, right, only constitutes to a small percentage, a very small percentage. But yes, it builds up over time as the confidence in the market grows. But other than that, it's not going to happen, guys. So I do not know what the hell is still available out there in terms of the crypto. When I look at crypto content these days, right, it's already kind of not really crypto content. It's speaking about China. It's speaking about interest rate movements. It's not really crypto. It's not really crypto content. It's diversified. And it's all about just speaking about, why Bitcoin dropped 15%, 11%. It's just stupid. It's not even talking about the fundamental issues that are hitting the space. There's no one talking about the fundamental issues that are hurting the whole ecosystem. And to be frank, right? None of these people who kind of lose millions to billions of dollars, none of them seem to be prosecuted. Like, it doesn't matter. Like, if you fail in crypto, it's like, you walk away. That should not be the right way. To be frank, that should not be the right way. But unfortunately, because of the fact that there is no foothold there's no foothold on these exchanges at this point of time, so a lot of these companies, right, or the founders or the CEOs are not like taken to court. They're not liable for the losses that have been made. So there has to be a change, right? Once that is implemented, people start getting scared. People will start will stop doing random things and hurting the retail investors, right? And to be frank, because of all these guys, retail investors are gonna have a damn hard time getting into crypto. But which is good. I feel that it's a breath of fresh air when retail investors are going to have it harder. It is just inevitable that this has to happen. It is. As much as I like the whole mass adoption idea, but I feel that people are not ready for mass adoption, and neither is the space. The space is not ready for mass adoption. Please, when I talk to developers, right, and their ideals, I understand where they're coming from and what kind of solutions they're trying to build out. But when actual money is involved and when you lose your freaking savings, because of a poor written code or a malpractice within the company, I think that's just not right. There's no accountability. No one is stepping up and admitting they're at fault. And you know what's the most painful thing? I see the CEOs benefiting from it. They're still living a good life after all this has happened, right? There's a little bit of public shaming and whatnot, but it seems like they can still move to another country. Nothing has affected them. They will withdraw the funds to protect themselves and their family first, but they will just fuck over everyone else. It's just not right. It's just really, really not right. I feel that this happens also in the financial industry. Don't get me wrong, but at least there's more accountability if you are running a listed company. You know what I mean? Like, when you're running a listed company as a CEO, you are going to be fined or even jailed for your malpractices, your mispractices, all that kind of stuff. I'm just saying there should be some level of accountability here. Like no point shaming someone on crypto Twitter. They don't give a shit. They're still millionaires to even potentially multi-millionaires. Even after all this, they go into hiding a while. This whole thing blows over. They already are still living a life somewhere, enjoying. Like, where's the justice? There's no justice in this space. So that's what I'm just trying to say. I just feel that there has to be some accountability, and I don't know when that will happen, but I only can protect my users, my people who are watching. I share what I can, guys. This channel is all about information and educating. It's really just purely that, and I still want to keep it up. I still want to do it in such a manner, Anyway, guys, stay safe. Hold your crypto in your cold wallet. If you can do staking, do staking. We're trying our best here. You know what? We're all trying. We're all trying to figure stuff out. Take care. See you guys in the next live stream.